Let's get cracking then. Action Construction Equipment, well, they have won a $25 million strategic contract from the Ghana government to set up an assembly plant in the country. Well, to discuss this latest contract, demand trends, as well as the outlook, well, we're joined by Sorab Agarwal, the executive director of the company. Hi, Sorab. It's been a long time since we chatted. This appears to have opened up a new revenue stream for you all. So give us some details. I believe the order win is close to around $25 million. So how much of money will you all be spending to set up this particular factory? I believe there is a funding arrangement as well. So give us some broad details, and what kind of a revenue turnover do you see?
See, it has been our endeavor in the last 3-4 years that we increase our export revenues, and then we are currently at about 5-6%, and we targeted to reach about 10-15%. So this is one of the first major steps. In this particular contract, the plant will be owned and operated by the Ghana government. So basically, this 200 crores or $25 million is the revenue we'll be making in setting up this plant and also transferring the technology and training their people and everything. There is no direct money involvement from our side. We are not spending the money. The money is being spent by government of Ghana, which they are borrowing from Exim Bank of India. So Exim Bank is funding this project for them, and they have chosen us to do this activity for them. So this is the first part of the business, and over the next 1 to 2 years, we have to set up this plant in the next 18 months. So this 200 crores of revenue will come into us with respect to setting up the plant. And post that, for the regular manufacturing process, they will require CKDs and parts and components to be exported from India. So that will be the recurring business stream, which will continue for years to come.
Okay. Hi, Mr. Agarwal. Morning. This recurring business fee, what might it be in the region of? And do you have visibility on whether there might be future such orders from the government of Ghana, or, are you looking to explore similar orders elsewhere as well?
See, the plant capacity that is being set up, according to that, the possible revenue can be to the tune of 300 to 400 crores annually, FY25 onwards. And I hope that the Ghana government is able to distribute or manufacture these tractors and backhoe loaders to those many numbers, so that our revenue stays there at 300 to 400 crores, which is expected. Similarly, we are also under discussions with 1 or 2 more, similar, for setting up similar facilities with governments in African countries. So let's see how it pans out. But yes, it's still in a little nascent stage. Maybe another 1 or 2 years down the line, they might mature.
All right, Sorab, this appears like very, very good news, but I just want to confirm it because, the stock markets are starved of good news. So we just want to get the right details on board. 200 crores is the total capex for this unit. It's going to be funded totally by the government of Ghana. Y'all are going to be in charge of it. Y'all will be setting it up. And from 2025 onwards, it has a revenue potential of close to around 300 crores. Did we get those details correct?
Yeah, perfect.
And at peak levels, what kind of a revenue can it do? Or peak revenues is 300 crores? Or can it go, like, say, to 400?
It can definitely go to 400-500 crores or more.
Okay.
That totally depends on the consumption and the sale which the government is able to do within the country of Ghana. And their intention is not only to cater to Ghana, but even surrounding countries in West Africa.
Okay. All right. So we got that piece. So that's good news for you, and congratulations on that front. But let's come back home then, and let's, understand about how is demand on ground. If you could give us a sense about, you have so much of exposure indirectly to the infrastructure space, so you could say directly as well, because you're supplying cranes, you're supplying material handling equipment. Now, give us a sense on both those two fronts. Now, last year, your cranes, you sold close to around 5,300 units, and material handling equipment of close to around 1,400. And I'm highlighting both these two because here's where the growth came in from. For this year, on both these two, segments, what kind of a volume number can you deliver?
See, talking of volume, definitely it is going to be at least 15% more in the crane segment. And overall, on the company basis, again, we are looking at about a 15-20% increase in our revenue. Especially on our construction equipment segment, where we are more bullish because we are a smaller player there. We are expecting a 30-35% increase there, plus another 20-25% in metal handling, and even a 15-20% in our agri. So on the whole, we are looking at least a 15-20% growth in this year.
15?
And I think we are 15 to 20% growth at least. And in the current scenario, I think we are very well on track to achieve that. Rather, we are in in the middle of the first quarter, rather more than middle. It's
All right. So Saurav, just to get this right, the construction equipment business last year, the volume's a little bit subdued. But you're saying that smaller part of your business, that's expected to do well. And on the revenue front, put everything together, you should grow by 15 to 20%. So you'll end the year closer to around, 1,900 to 2,000 crores.
Yes.
Input costs
should be upwards of 1,900 crores as it seems, and we are very well, moving in that trajectory.
Okay, input costs but have been spiking up. You have indicated that you have been taking price increases. Now, given the fact that if you could quantify first, what is the price increase you have taken so far in this financial year on a blended basis, and how much of the input cost have you already covered, input cost pressure? What should the margin band be? I remember, Saurav, in the past, you were talking.
See, in the beginning of this financial year, we increased our prices again to the tune of 4 to 5% because there was absolute mayhem post the Ukraine war and the inflation spiking up and steel prices going totally haywire. But the situation seems to have come well under control, especially in the last 10-15 days. And hopefully, from the next quarter onwards, we will get a benefit of margin expansion owing to the lower input costs. And in the current quarter, we might see a small downtick in our margin profile. But I think that should be very limited, if at all. That again, if at all. So on the whole, on a yearly basis, I think we'll be able to expand our margins by at least 0.5% to 1% at least, if not more. And that time will tell.
Okay, so for last year, you did margins of close to around 10%, going by your presentation. So for this year, you're expecting it to be close to around 11% on a blended basis. First quarter, as you said, there'll be pressure, but for the year on the whole, it should be 11% upwards?
At least 10.5%, 11%. It totally again depends on how the operating leverage will play. If we are able to get more benefit out of that, so it can also be more than that.
Okay.
And the way prices have started cooling off in steel, I'm sure it will be more than that.
Thanks so much, Saurav, for stopping by and filling us in with all those details. So you're guiding for a 15 to 20% revenue growth at least. You kept saying that, so I need to specify that. Margins of around 11 to around 11.5%. You won a new contract coming from Ghana. You expect revenues of 300 crores by 2025. You could scale up from there, hopeful of getting orders from some other neighboring countries as well. Good speaking to you.